What's up, people? It's the Pip Magnet back again with another video. We know it's been quite a while since we actually posted any videos for you guys on YouTube because we've been caught up with a lot of things, But anyway, we're back again. So anyway, to start off, we're just gonna touch ups, since it's been a minute. We're just gonna be kind of giving you guys like a rundown, not really a rundown per se, but anyway, without further ado, let me open up MetaTrader. So as you can see, really it's not much going on. It's had a lot of different currencies going on here, but anyway, we're not going to be focusing on this. Actually, I'm going to delete everything here, and then we can literally go to what we're looking for. So far we do have a trade currently running. As you can see there, volatility V51 second index. Let's just open it up and let's see what we're looking at. Okay, let's just open it up. All right, so that's what we're looking at. This is a trade that I took a few hours ago. As you can see, that's a 4-hour candle. This is a trade I took 4 hours ago. Actually more than 4 hours, but a few hours ago. And actually I just wanted to give you guys this little rundown just to show you the strategy that was used to take this trade. You can see that's a trade. We took a sell right there, and then we just adjusted the stop loss, but eventually soon this trade will reverse. But anyway, without further ado, let's get right into it. Okay, let me see if I can just tilt my screen a little bit for y'all. There we go. That's what's up. So anyway, as you can see, if you look at the market, as you guys already understand, actually I think I need to do another video for like newbies, people who are still like beginning with trading, people that are still new, so we can actually kind of give you guys like a rundown on what exactly to look for and all the stuff. But like for now, I'm just gonna give you like a quick analysis so we can kind of see how we got to the decision to sell. So if you go to your 1-day chart and then you have a look at it, you can see that the market is actually at the moment giving us a bearish bias. As you can see there, we got our high, we got our low, we got our low high, lower low, lower high, lower low, lower high. Shoot, shot down there. He gave us another low, and then here he kind of started ranging a bit. Then he gave us a new high there. So basically, with that being said, you can basically tell that our market is bearish. So basically the reason why I decided to take this trade is because I saw, okay, first things first, I went to my daily chart. I looked at the market bias. Market bias is bearish, as I showed you, showing that the market is trading to the downside. Okay, perfect. After that, the second step I took is, after figuring that out, I went to find my main points on the chart. So at the moment, the main point right now that we have, let's see if we can quickly grab a tool over here. Actually, over there. Then let's just grab a line over there. Awesome. So okay, that's our high at the moment. This is our highest high on the market at the moment. And then we have our let me quickly get on it. We have our lowest low over there. So that's the range of the market at this current time. So that's our high and that's our lowest low. Okay, so we got that. So with that being said, as you can see, our market was in kind of a range. If you look closely from your left side, there we did have kind of a range. The market is not really decided. So after seeing that, just doing a little more looking deep into it, just so that, okay, this is the high at the moment, that's the low at the moment. So okay, with that being said, I just looked a little bit more closer to the market, and as you can see, we do have a very strong push from the high to the downside, showing that the bears are in control of the market at the current moment. So the market was trading to the upside, trying to retrace, and then when the bears came in, they shot the market straight down to this point. All right, and then with that being said, the market tried to give a little bit of momentum to push to the upside, but then it failed. So looking at this candle that was formed the previous day, this one right here, you can see that there's a lot of indecisiveness in this candle here, because people came in with their buys, they put their buys, but they didn't have enough momentum to actually push the market up. As you can see, it is on a point of interest. If you look at your left side, that is a point of interest to show that the market could have possibly shot to the upside. It could have possibly shot to the upside, but it did not shoot to the upside because bearish sentiment. There was a lot of bears, there's a lot of sellers. So bears are sellers, bulls are buyers. I'm sure most of you already know this by now, but for those who don't know it, just always remember, bears are sellers, bulls are buyers. So anyway, yes, having a closer look at it. So actually, I think I went off track. Sorry about that, guys. Coming back to track now. So the reason why I took the sell is because I saw the bearish sentiment, like I said in the beginning, and then with that bearish sentiment, I then downsized. So from daily chart, I downsized to 4-hour chart. Okay, 4-hour chart. When you look now at 4-hour chart, you can see a very beautiful pattern drawing there to just prove that bearish sentiment. So as you can see, the market is shooting from there. We have a high there, we have a lower low there, we have a lower high there, we have a lower low there, a lower high there, a lower low there, and then it kind of tried to make a high. So actually what was happening there is the market was just trying to stop out and trap people. So the market does that all the time, because other people sold really quickly and put their stop losses just above that line over there. The market came and took them out. It's called liquidity. Okay, I'll make another video about that just to teach you guys about liquidity. So they basically liquidated these people. They took out all those stop losses, and then the market shot back down. Then the market made a lower high right now, and then as you can see where we previously are at the moment, we broke the previous low. As you can see, there we go. I know it kind of looks like a kid drawing, but it should make sense. So we broke the previous low from the left side, meaning that okay, now we are in a downtrend. Done tricking all the people that came in early. But anyway, I will make more videos in detail to explain everything in detail so you guys can really understand. But for now, I'm just gonna quickly give you like a quick rundown. So anyway, as you can see now, the market is bearish biased, and you can see we did break the previous support. But as I was saying, I then downsized to the 4-hour chart, and then we saw this beautiful downtrend forming. Okay, cool. Then we go a little bit lower to the 1-hour chart just to have a better view of it. Okay, the market starts getting a bit more noisy when you get to the lower time frames, but don't let that scare you. Just always follow the rules. Okay, just always follow the rules. After going to a lower time frame, I had more of like a view of what's going on. Then I zoomed in here. Then after I saw the market breaking the previous lows, so where's my pin? There we go. So after the market broke this low, as you can see, the market broke this low and it came back up, but it didn't have enough momentum to break this high. So that then just told me that okay, the market is not having enough momentum to come back to that high. So that just tells us that it's not going to shoot to the downside, because now like I was explaining, if you see in a downtrend, there's lower lows and lower highs. So with the lower low being made and a lower high being made, and then it breaking the previous low, making another lower low, the market then came back up, but it didn't manage to come back to this high. So without it managing to come to this side, that just then tells us that okay, there's not enough momentum for the market to go to the high, and then that just confirms that we're going into a downtrend. But always, guys, let me just say this: always, before you get into a trade, you must always wait for a confirmation. So that was my first confirmation. It breaking this low was my first confirmation. Second confirmation was it. Sorry, let me take off all that junk. Okay, so circling confirmation was the market when it ranged. So as you can see, it gave a little range here in this rectangle over there. It gave a little range, the market was undecided. They didn't know where it wanted to go, buyers or sellers. But then eventually the market did then give a beautiful bearish candle over there. As you can see, if you look closely, you can see these three bearish candles. This is bearish candle number 1, number 2, and the bearish candle number 2 is the one that actually broke this low of the range, showing that okay, we're out of the range, and the powerful side of things now is the bears. You see, so now the bears are the ones with the power, meaning that we're selling. Okay, so that was confirmation number 2. So that's confirmation number 2. Okay, cool. So after that, confirmation number 3 now was, and as you can see, there's a little bullish candle that formed right there. This little bullish candle that formed right here. So that is what we call order blocks. So I will explain this more in depth on the other videos that I will make in the future. But yeah, for now, just trying to give you guys a rundown of like how we got to where we are now. So seeing that order block there, that's just like a retracement. Other people call it retracements. Well, it is a retracement and order block at the same time. So yeah, like I said, I'll get into detail on another video. But for now, after seeing that and seeing the market failing to actually push above and come back, because usually the market, what it sometimes would have done, it could have like came back to this position just to retest, then shoot down. But sometimes the market doesn't always move the same way, because remember, there's different people in the market. People take trades with emotions and different stuff going on. But yeah, when I saw this order block that we have here, I waited to see, okay, what is the market going to do after that? I saw this bearish candle that then formed next to the order block, kind of giving me a confirmation that we're still going to the downside. So what I was actually waiting for was a confirmation of a sell by the candles actually breaking that low over there. So let me just see if I can, let me just downsize again. Let me just downsize to lower time frame, 15 minutes, so you can have a better view. Okay, there we go. It looks a little bit better. See, now the candles are actually a bit more and you can see it better. So now, as soon as the market broke that low, then we knew now we're in money. It's golden, because now we have confirmation number 3. So confirmation number 1 was the trend. The trend was bearish. Confirmation number 2 was market breaking this range. And the market broke this range over here, right here. That was confirmation number 2. Then confirmation number 3 was when the market tried to retest and then shot down after breaking this range here. So after breaking this range, when I saw these 3 candles, that then gave my confirmation, say, okay, these 3 bearish candles. After seeing these 3 bearish candles, that just gave me then my confirmation, say, okay, candle number 1, number 2, number 3, we're definitely in a sell. And then I sold after the 3rd one, putting my stop loss just above here, just right above there, and my take profit way to the bottom, giving me a very good risk to reward ratio. Let's see if you can get the take profit. You won't really be able to see it properly because of how the market is at the moment, but yeah, giving a really good risk to reward ratio. So yeah, we're gonna hold the trade and see how it plays out. But always remember, when it comes to trading, it can either go both ways. There's nobody who can actually say that they know the market's 100% and whatever trade they take is a winning trade and it's never going to reverse or whatever. The market is the market. At the end of the day, nobody really controls them. Different people with different emotions are always in the market, buying and selling. So a trade could be winning, like this one, as you see, is winning. But anytime, if you're not careful and you don't constantly check your charts and constantly monitor your trades, it could reverse. Because I could leave it like this, and then I find out tomorrow the market found a way and it pushed up all the way up, and it changes all of a sudden from a sell, from a bearish bias to a bullish bias. That happens all the time in the markets. That's why whenever you place a trade, always make sure that you monitor your trade. Always make sure that you look at it, you check it, and don't just leave it. Some people like to hold trades and they leave them trading, running, which is cool. It is cool. It does work, but I'd advise that if you want to do something like that, it's always smart to at least lock your profits, like see how I did it, or just try and remove at least 70 to 75% of your profits. Then just let the 25% running. By doing that, you're basically running risk-free. So even if the market does turn around and hits your stop loss, you already made money. So that way you're safe. But anyway, thank you for watching. Hopefully you guys learned something here. But yeah, we'll do more detailed videos to teach people. Just comment in the comment section. Tell me what kind of videos you guys want to watch, what you guys are trying to learn, so I can see what I can make, what kind of content I can make for you guys. And yeah, just show the love, support. Please like, comment, subscribe, share, and yeah, if you subscribe, definitely you're going to become better in trading. But anyway, thank you for watching. Hope you guys have a lovely one, and peace.